Hi class, and welcome to demonstration video for, let me just delete this first, for exercise 19-10 and 19-11 for chapter 19. These two exercises will demonstrate the calculation of earnings per share or EPS based on new shares issued, stock splits, treasury stocks, and yep, those are the different areas that we're going to look into. So I'll show you how to calculate EPS for each of these different situations. So the first one, the exercise 19-10, okay, and this is on page 1185. For the year ended December 31st, 2013, North Star Industries reported net income of $655,000. At January 1st, 2013, the company had 900,000 common shares outstanding. The following changes in the number of shares occurred during 2013. Okay, so on April 30th, they sold 60,000 shares in public offering. On May 24th, they declared and distributed a 5% stock dividend. And on June 1st, they issued 72,000 shares as part of the consideration for the purchase of assets from a subsidiary. We're going to compute their earnings per share for the year ended December 31st, 2013. Okay. All right, so I'm going to lay this out very clearly. So what I'm going to do is I'm going to put a line here because I'm going to have a division. So basically we're going to have net income as our numerator of 655,000. Okay, we're going to divide that into our 900 shares at January 1st. Okay, then we're going to add that to our 60,000 shares. This is 900,000 shares. I'll go back and put the zeros in there. 60,000 shares, but it can't be straightforward 60,000 for the whole year because it was only outstanding for 8 months out of the year. Okay, if you look at the date, it was sold on April 30th. So from the next month, from May through December, it's only 8 months. So you have to multiply that 60,000 by the 8/12. Okay, and these are the new shares. You have to also then, I'll do this, multiply by the stock dividend. I also have to do that here, so I'm going to change it here right now. Okay. This 1.05 is saying that, hey, we had a 5% stock dividend. I'm going to multiply the 900,000 by 1.05. Which will in that sense include that 5% stock dividend. Okay, 100% of those plus 5% of that. Okay, so once I have my 60,000 being outstanding for 8 months of the year only, I'm going to multiply that by 1.05 for the stock split, because the stock split happened in May. If it had happened prior to April, we wouldn't be doing that. Okay. And then we're going to add in the new shares, the 72,000 shares that were issued on June 1st. And once again, it was only issued partial years, so it was only for 7 months. Okay, so we have to multiply that by 7/12. And notice that I'm not going to multiply by the 1.05 because at the time when we issued these shares, the stock split had already happened and it doesn't pertain to any new shares that are issued after the stock split. Okay, so this is what we're going to be dividing by. So if we go ahead and put in our formula here, okay, so it would equal, let me just go ahead and do something here. All right. I'm going to change my mind on that. Let's not do that right now. Oops. Okay. So basically I'm going to have 655,000 up here. Okay. For my net income. And in here, this is what I'm going to do. Okay. I'm going to put in my formula. I'm going to put that 900,000 times the 1.05. Okay. And I'm hoping Excel likes this, because if I put in wrong, if I don't put in enough parentheses, it won't know how to do it. So I'm going to make sure that I do that. Okay, and once again, parentheses, 60,000 times the 8/12. And I'm going to multiply that with 1.05. And I think I'm going to need 3 of them. Okay. Plus, you don't have to do this. I'm only doing this because I'm showing you, you can do it separately. You can do 900,000 times 1.05 separately, and then do the 60,000 times 8/12 times 1.5 separately, and then do this calculation separately, and then you can add them all together. You can do that. I'm just doing it all together here so that I can come up with the right answer here for you. And then I'll go ahead and show you how to do it separately too, just so that you don't get confused. Plus 72 over 7/12. Let's see if we get it right. Okay. I don't think it likes my formula. Okay. It's too hard to do the formula in here, so I'll go ahead and break it down for you. Okay, so for the first one, we've got 900,000 times 1.05. Okay, so that's going to be 945,000 after the stock split. Okay, so 900,000 shares were issued after the stock split, and now they have 945 shares. The next one is the 60,000 times 8/12 times 1.05. So I do 60,000 times 8/12 times 105. It should be 42,000. Okay. Then my next one is 72,000 times 7 months over 12. Let's see what our total is. Okay. That should be what our number is. Okay, so over 1,029,000. That should equal okay, so let me just check everything here. That should equal an earnings per share of $0.64. Okay, let's make this number. There we go. 64 cents. So that's our number there. So our EPS is 64 cents. Earnings per share. That's exercise, well, I'm not going to highlight it. That's exercise 19-10, calculating earnings per share. Okay. All right, next one, exercise 19-11. Okay, and we are also going to calculate earnings per share as well. So I'm going to do the same thing. Okay. All right. The Alford Group had 202,000 shares of common stock outstanding at January 1st, 2013. The following activities affected common shares during the year. There are no potential common shares outstanding. So they gave us 2013 and 2014 transactions. Excuse me. And the requirements are to determine the EPS for 2013 and determine the EPS for 2014. And for requirement 3, what amount will the 2013 EPS be presented in the 2014 comparative financial statements? Okay. All right, so this is requirement 1. Once again, to calculate EPS, we have to take net income, which is 400,000. Okay. And for EPS in 2013, okay, they had 202,000 shares outstanding as of January 1st. Okay. We are going to subtract the October 31st Treasury shares. Okay, they sold Treasury shares. So they sold 6 Treasury shares sold from February 28th. Okay, so they sold 6,000 shares of Treasury stock. So they purchased it and then they sold it. So if we purchased it, because Treasury stock are stocks that were previously issued, and if the company reacquires it back or reacquires the stocks, it's called Treasury stock. And when they reacquire it, they have to subtract that from the equity. So let's do the 6,000 shares. Okay, and it was only outstanding for 2 months out of the year, 10 months out of the year, because the transaction was made on February, so 10 months out of the year. So that was right here is the issue, the purchase of the Treasury stock back. They sold it right away, not right away, but at the end of October, they sold the Treasury shares that they reacquired in February. So we're going to have to add that back into equity. So 6,000, and it was only for 2 months that was outstanding. So 2 over 12, okay? And we also have to take into consideration the 24,000 shares that were issued on November 30th, which is only for 1 month outstanding. Okay. New shares. Okay, I'm going to go in here and do Treasury stock. Let me do this. There we go. Okay. $6,000 shares. All right. Okay, so that would equal 400,000 over. So let's do it separately here. Okay. For the first one, we've got 202,000 shares times would just be 202,000 because there's nothing else there. Okay, so for this one, $202,000. The second consideration is going to be our treasury stock. Try to be consistent here. February 28th. Okay. The treasury stock of which is the 6,000 shares times 10/12. Okay. And then the third is our October 31st treasury stock, where we sold it. So it'd be 6,000 shares times 2 months over 12. It was only outstanding for 2 months. Okay. Then last but not least, then we have our 24,000 shares that were issued on November, which is only for 1 month. Okay. All right, so let's add all these together. Well, there we go. Okay. We're subtracting and I added it, so that was the issue. Okay, so my denominator is going to be 200,000. Okay, once I took the January shares, subtracted the treasury stock that the company reacquired, added it back because it was sold back as of October, and then the new shares issued as of the end of November. That gets me to 200,000. All right, so let me just do my calculation in here. So if I take 400,000 divided by 200,000, my earnings per share for the situation is $2. Okay, for that one. And then for the EPS for 2014, then what I'm going to do is I'm going to copy and paste this. Well, yeah, let's just do this here. Copy and paste, special, all sorts of some things. Okay. So this is then requirement 2. Okay, instead of 2014. Okay, and net income for 2014 is the same. So basically, we're looking for EPS in 2014. So here we're going to have the 202,000 shares of common stock. We're going to subtract the 6,000 shares of treasury stock, add that back because we sold it after a few months of reacquirement. And then we're going to add it to the 24,000 shares that were sold on November 30th. Then we're going to multiply that by 2 because of the stock split. Okay. And we have to take consideration the 6,000 for the treasury and the when we reacquired the treasury stock and then when we sold it, plus the $24,000 for the whole year because it was done the previous year due to the stock split. We have to take all that into consideration. We didn't have any other transactions in 2014, so we didn't have to take any other transactions into consideration besides what was beside what's on the company's books right now. Okay, so if we do that, I will have 400,000 here. Okay, so if I take 202,000 minus 6,000 plus 6,000 plus 24,000 times 2, I should have 452,000 shares. Okay. So if I do my formula, 400,000 divided by the number of shares outstanding, 452, my EPS is going to be 88 cents for 2014. Okay. All right. And then for requirement 3, at what amount will the 2013 earnings per share be presented in the 2014 comparative financial statements? So what we would do here is, I'm going to copy this once again. No, that's easy to just put a line right through it. Okay, there we go. All right, so we already determined that net income is 400,000, or it's given to us actually. And the amount that we will report under the 2013 EPS in the 2014 comparative financial statements would be as follows. So we would have the 200,000 of the weighted average shares, okay, which we calculated in requirement 1 here. Excuse me, requirement, yeah, right here, okay. And then we're going to multiply it by the stock split, which is basically just 2. Okay, so what I'll do is we're going to take 400,000 divided by 200 times 2, 200,000. Okay. So basically, my EPS will be $1. Okay. And let me just do this here. Label this so that okay, so that's what this one is for. Okay, so they would be expressed as $1 for this situation. Okay, so that is then exercise 19-11, and that is how you calculate earnings per share. You would take into consideration all outstanding shares, okay, and take into consideration stock splits, any stock dividends that were made here, which is what we did here, that 1.05 is the stock dividend. Okay. Other than that, if you have questions, feel free to email me or call me.